Good morning, YouTubers, stock Twitters, Bagadon, and Stock Market Caddy, and we wanted to demonstrate a trading tool of ours. This is the format is a trade generator, and specifically it's SMC Doppler radar for our members. They also know it as the SMC Oboe radar, virtually the same trading generator. But what we've done is we've put the breadth indicators, the tick in the Trin in here, and these are breadth indicators. And what I want to do is the breadth of the market is reaching euphoria, and I want to bear with me. I'm going to link this. I should have been ready to go. I want to fade the ES. Here it is. So we're going to sell the ES, and I'll explain why in a moment. And we are now short. What we're doing with this tool is different, much different than with Swing Machine. Swing Machine is a trend following system. And, and hopefully everyone understands what makes a trend. There's a lot of people that may not actually. It's really, really important on any type of trade that you're doing that one understand what type of trade it is. This is a counter trend system. And what we're doing is with the breadth indicator up here, particularly the tick reaching into euphoria, meaning that there's really, it's in our estimation and in the estimation of the trade generator, at a 5-minute level, it's a little bit overdone. So we will fade it, especially to the ES is not in euphoria. So we got a little bit of divergence. We don't want to get too smart here. We're playing for a trade setup. We're playing for the euphoria in the overall market, this tick, to come back in. Not necessarily go to panic levels, but to come back in. And when it comes back in, we're going to close, buy to cover this trade. This type of trading they're small, relatively. They can be larger, but we're actually trading for small bites. The risk on the ES is approximately $200, $150 to $200 a trade when I put this on. That's with a mini contract. A micro contract would be 1/10 of that. 5 micros, just you can do the math from there. So if we're risking $200 is my outside. If I make 200, if I get up 200, I am most certainly going to lock in a winning trade. I'll be very happy when I'm counter trading, be very happy with a 1-to-1, 2-to-1, certainly a 3-to-1. So if I was able to walk away with $600 risking 200, that's a beautiful way. And you can see that the breadth of the market has now, was up here in euphoria and now moving back. Is it individual people buying and selling? Sure, there's some of that. But most of the market is machined, folks. It's machined. And these machines, they also have trailing stops, dollar trailing stops. And when they push into extreme levels, a lot of times those machines are trigger happy, and they will begin to take some profit. And we're playing into that. This is when we write those tools ourselves, but this is very dynamic and gives us a really nice view of what's going on. And I can see when I'm focused on the ES, now we have the other markets, the NASDAQ, the Russell, the YM, but I'm highly focused on the ES. And I can see that the ES is, in our scale here, is really middle of the road. And the tick they're trying to keep it a little positive, but we're doing okay. We've had a drawdown of $25, and we've had a run up of 63. Now this style of trading, counter trend trading, is not what we teach our members to do, in the first few weeks with us. And it's not something you probably want to do every single day. Although, one could. You would have to have a psyche for it, because it is different. You trade much more frequently, and you've got to be super disciplined, because when you counter trade, there is a risk that you are against the dominant trend, and you could, you don't want to get carried out in a riptide. And in fact, we're looking to build off of Swing Machine a radar, now that I think of it, when we're in the process of doing that, that'll give you all the benefits of Swing Machine to be able to see the trend and at the same time see these counter trends take shape, so that it would be safer, relatively safer, to take the counter trend that is ultimately in the direction of the dominant trend. Okay. We talk in those terms all the time. If you're not able to, whatever it is you're trading, cannot readily identify the trend, then you'll be in rough shape. So we're getting a little bit of a draw. I don't like that. I'm not going to take much more than a $200 hit, and you can see the ES is now getting up into here. So we're going to let this play out a little. Now, YouTube limits us to about 10 minutes, so we're going to try to keep this short. And these trades are usually pretty short, short-lived. It's not usually something you're going to be in very long. And so you go in with the mindset that I'm going to put this trade on. My maximum risk is, a small, relatively small amount of money. I'm either going to get it or I'm not, and then we exit stage right. Critically important that you keep track of your trades, keep track of your performance, so that you're in a position to be able to help yourself and know what one might be able to do to improve. So we're still middle of the road here. I don't think that this is gonna I don't see this, blowing out on us again. So we had a little drawdown of $125, run up of 63. We're right in the middle, and the breadth of the market, I can see right now, the overall breadth is deteriorating. Now, if it gets down into here, wherever I'm at, I'm probably going to want to close my trade, because then everybody else is on it. The idea here is that you're actually selling when everyone else is buying. You ever see the scene in Caddyshack? Like Rodney? They're buying. I'm selling. They're selling. I'm buying. And basically, that is the life of a counter trader. That isn't my life. I don't trade like that day in and day out, although there are some times when I'm just in the mood to do that. And that's fine. We try to be diversified in what it is we do. And so again, things are deteriorating on the overall breadth of the market. I would expect the ES to also deteriorate. But if this breadth indicated, namely the tick, which is what I came in on, if it gets down in here and I'm only up $25, then I'm going to have to exit out. But right now it's still middle of the road. So I still got plenty of opportunity for this thing to crap out here. So we're going to let you watch. And I'm going to just be quiet. We're going to let you watch. So it's going to be a few minutes, hopefully. If you haven't seen, we posted an earlier video. I had a question from a person that called me over the weekend and was asking about Swing Machine, which is a trend following system while this is playing out, and whether or not you can use these tools to trade stocks. And I'm like, yeah, absolutely. I was like, why don't you do that? Well, we don't trade stocks primarily because we use, too much money. Oh, why do that? I traded AMC to demonstrate 1,000 shares of AMC. Very, very liquid, could get in. Yes, we were able to capture close to, we had a run up of $900, went higher. But if we trade futures, we use less capital. So why not? If we trade with surgical precision, why not use less capital? But the point being is, if you want to trade stocks, whatever it is you trade, stocks, options, futures, whatever it is, you want to trade something that is highly liquid. You don't want to be putting in 1,000 shares into a stock that has a big spread that's not liquid. What do I mean by spread? The difference between the bid and the ask. If that's wide, then you could get glommed, you could get ripped off. Okay, so we're still doing fine here. Notice now this is very telling here. The S&P is actually deteriorating, and the breadth of the market's still up here. They haven't got the message yet. Okay, so our trade is looking really, really good because the market is actually leading down, and the suckers are still long, they're still buying. It's Monday morning and they want to buy. So this is looking even better to me. Now, if the S&P gets down into here, then I probably will want to take the trade too, or take it off. Again, this is counter trading. I'm not looking at a chart. Right? Sometimes, now our traders look at radars. They also look at charts. We try to expose them to as many different style of charts as possible. Sometimes you can get a person, I'm not saying everybody, can get chart blindness. They begin to see things that aren't there. They begin to get impatient, and look at the tick trying to get up into euphoria, and the S&P is not going there. This is a little unusual. This is going to come. One of two things has to happen. The overall breadth of the market's got to come back in, which I think it will. And the trend, by the way, is also another breadth indicator. And you can read up on them. I prefer to put the tick. I prefer to trigger off the tick than the trend. I think it's a little more sensitive, but it's a little unusual. They're bidding up all the stocks. The S&P is down in here, isn't going with it. So I think the rest of the stocks will come back. I'm thinking that this trade is going to pay us $200, $300, $400 here still. So we're over YouTube time. We're 12 minutes into this. I tell you what, one way or the other, we get inside of 15 minutes, I will close this trade so that we can post this on YouTube. If you have an interest in getting away from your charts, if you're getting chart blindness, you want to get away from all the noise. What do I mean by the noise? How about all the people tweeting about, I'm hodling AMC, hang on, I'm an ape. All us apes got to stick together. That's that kind of crap. You want to get away from that, then you might want to check us out. And I think for your long-term trading health, you want to get away from that as soon as possible, because that is not going to get it done. It is not. You may feel like you're in some sort of a network or something, and nothing could be further from the truth. As they say, if you don't know who the sucker is, it's probably you. And anybody caught up, I don't care if it's Bitcoin, I don't care if it's AMC, I don't care if it's gold. When you get a bunch of people pounding the table to buy something, one way or the other, chances are they're talking their book, and they will be the first ones out the door as soon as they hit their number, and they'll leave you holding the bag. So we're 13, 14 minutes into this trade still, and I'm inclined just to take a little profit. These are small. Now, the nice thing about counter trades is they're frequent, they're relatively small. Small risk for small gains. We would like to get, at least I'd like to get 1-to-1. I came into this trade risking 200. I got down as much as 125. So I'd like to make 2-to-1. And you can see that the breadth of the market it can't stay up there with the S&P doing that. The S&P has to broaden out, go with it, or the rest of the market's got to come back in. And as well, we can see the other markets here too. They're not, the Russell is still in there. That's that early morning buy crowd on the small caps. So We'll still see if we can pull this off here. All right, we're down to 15 minutes. We're going to go ahead and take this trade, and it'll pay out about $100. I'm Bagging On Stock Market Caddy. If you're interested in getting your trading mechanical, interested in some of these tools, none of these tools are for sale, and none of them are for individual lease. It's take them all or take none of them. And with that lease, we need everybody to go through what we call a 3-week Q school. We want folks to understand what these tools are and how to use them. You know, we want you, and it isn't, we're not going to be teeing up the opportunity. We will, well, let me put it this way. We do showcase at night the setups we see for the next day, but we don't make specific recommendations to buy or sell anything. It is about teaching folks how to play the game, and they get an opportunity to learn to trade their game, take full responsibility, and very, very empowering, hopefully, and very liberating once you're underway. Good luck.